If you walk into a bank with $500 in your account, and I walk in with $25 million, we are not using the same bank, not even close. Same building, same logo on the door. But you get an app and a fee schedule, and I get a private phone number. Today, I'm breaking down exactly what changes at every single wealth level. $0, $10,000, $100,000, $1 million, all the way to $25 million. So you know exactly where you stand and exactly what to ask for next. Let's start at the bottom, because most people watching this are here. $0 to $1,000. You are a liability. I don't say that to be harsh, I say it because it's how the bank's internal system actually labels you. At this level, banks make almost nothing off you. So what do? They charge you. Monthly maintenance fees, overdraft fees, minimum balance penalties. Bank of America, Chase, Wells Fargo. These fees can run you $12 to $35 a month if you don't hit their minimums. You're not a customer to them, you're a fee source. The move here is simple. Get into a fee-free account, whether that's an online bank or a checking account with a waivable minimum, and stop the bleeding. $1,000 to $25,000. You're invisible, but tolerated. You've stopped the fees maybe, but you're still getting the standard experience. Standard interest rates on savings, and I mean standard, like 0.01%, while high-yield accounts elsewhere pay 4% plus. No one is calling you. No one is reviewing your account. You're a number in a database, and the bank is happy to let your money sit there, earning them interest on the back end, while you earn basically nothing. $25,000 to $250,000. This is where you start getting noticed. Cross roughly $15,000 to $25,000 with certain premium checking tiers, and banks start waiving fees automatically and offering slightly better rates. Push past $75,000 to $150,000, and something real happens. Chase, for example, has tiers like Sapphire Banking and Private Client that kick in right around here. At $75,000, you get reduced fees and better perks. At $150,000, you often get assigned an actual banker, a real person with your name in their contact list, not a call center. This is the threshold a lot of people don't realize exists. You don't need to be rich to get a dedicated banker. You need to be organized. Consolidate your accounts, hit that number, and the bank starts treating you like a relationship instead of a transaction. $250,000 to $1 million. Welcome to relationship pricing. Now you're talking about mortgage rate discounts, loan rate discounts, waived wire fees, and a private banker who actually knows your name and your goals. Chase Private Client, for instance, gives meaningfully better mortgage pricing once your combined deposits and investments cross the $500,000 mark, and even better, past $1 million. This is also where banks start cross-selling you into wealth management, not because they suddenly love you, but because now you're profitable enough to justify the attention. $1 million to $10 million. You leave retail banking behind. This is the real dividing line. At this level, you're no longer dealing with the bank you see on street corners. You're moved into private banking or wealth management divisions. You get a dedicated team, a relationship manager, an investment advisor, sometimes a trust and estate specialist, all coordinating on your behalf. Your loans get custom underwritten. Your rates are negotiated, not posted. You can get things like securities-based lending, where you borrow against your portfolio instead of selling it, is one of the biggest tax advantages available to people at this level, because you get liquidity without triggering capital gains. You also start getting invited to things, market outlook calls, estate planning seminars, access that isn't advertised anywhere because it's not for everyone. It's for people who already have the number to get in the room. $10 million to $25 million. This is private banking's top shelf. Now, the bank isn't just managing your money, they're managing your family's financial infrastructure. Multi-generational trust structures, family office-style coordination, direct access to the bank's most senior advisors, the ones who typically only work with a small book of ultra-high net worth clients. You get first access to concentrated investment opportunities, private equity deals, pre-IPO placements, real estate syndications that never reach retail investors. Your banker isn't just picking up the phone when you call, they're proactively calling you. If this helped you understand where you actually stand, follow for the next video, where I break down exactly how to negotiate better rates at every single one of these tiers.